very warm welcome from my side as well. My name is Andrea. I'm from Süddeutsche Zeitung, which is the Paradise Papers Zeitung. It's easy to spell. And we're talking today about something that everybody knows. It's rules. I'm sure your parents made up rules for you as well, and I'm also sure that most of you would not like them, because I assume that many of you thought that they would stifle your creativity as a child. And I'm sure that your parents may have thought that those rules will help you to develop. The same is true for finance. If you look at fintechs, they're kind of the youngest ones in the financial sphere. And this is our topic today. Does regulation for fintech stifle innovation? I'm happy to present you those two wonderful ladies, Claire on my left and Kat on my right. Kat is co-founder of Kabbage, and Kabbage has provided approximately 3 billion to SMBs through a fully automated platform. Prior to Kabbage, Kathryn worked for 6 other startups, so she's kind of an expert in young entrepreneurship. Claire is head of the Digital Center of Excellence, Innovation and Partnerships at LBG. She has set up the innovation labs on de-risking the group's strategy, identifying fintech and tech partners, and making innovations everybody's job. What we are going to do today is, first, Kat will outline her views on why she is for the motion. She will have 6 uninterrupted minutes for this. And then Claire will have her 6 minutes. Then the two of them will have 2 minutes for rebuttals. But first, I would like to know what you think about the question, will regulation stifle innovation? So please, everybody show me a hands who thinks that regulation will stifle innovation. Who thinks that is true? I know it's late in the day, but up with your hands who thinks about that. I can see only a few hands. Okay, so let's take the other side. Who doesn't believe that regulation will stifle innovation? Show me your hands. Oh yeah, that's clear. Most people are on this side of the motion. So, let's see who manages to convince it.
Who let the regulators in the room?
Kat, go ahead.
Sorry, so I think we're all clear. Regulation is designed to protect customers, consumers, and small businesses, and anyone else. My position, of course, is that regulation can take it a little too far. Obviously, we are talking about regulations that are designed for bad guys, basically, to prevent them from taking advantage of their customers, and I think most people are good. So I think we have taken a very blunt instrument of regulation and applied it to lots of different industries, and in this case, it's financial services. Most of my examples are going to be based in the United States because that's where Kabbage is located. But we'll see if I can get you guys to raise your hands a little bit more. I want to talk about Exhibit A, which is banks. How many of you think that your bank is one of the most innovative companies with which you do business today? Two people in the audience think that their bank is the most innovative company with which they do business. I would like to know who your bank is. Maybe I'll have an opportunity to work with them in the future. Yeah, yours. Barclays. Barclays is innovative, so that's exciting. Oh, she works for Barclays, just as a disclaimer. I think maybe that's how we got the other hands up in the first place. So banks tend to be inefficient, and they tend to be a little bit slow when it comes to adopting new technologies. And again, in the US, what I think is happening is they are so hamstrung by regulation that it's hard for them to move quickly. I'll use the example of small business lending. In the United States, even a regional bank that only serves a small percentage of US customers will have floors and floors of regulators who go to work every day at that bank. Their job, by the way, is specifically to look at every loan that's been originated by that bank, manually, by hand. That's a really inefficient process. It's very time consuming. So it makes it hard for banks to be innovative. Banks have always been fintech companies in as much as they use technology. Banking is very easy to automate. Banks partner with lots and lots of technology companies that help them do things like their core business banking, their general ledger, their payment processing, fraud management, credit decisioning, all kinds of things are managed by third-party companies, and they use that technology, but they don't develop the technology themselves because that's not necessarily what they're good at. What they're very good at is managing and moving money. But regulation still makes it harder for them to do their jobs, and it makes them slow, and they rely more and more on third-party technology to do that. I think the next problem with regulation and financial services technology is that regulation is a very blunt instrument. So, you know, it requires that lawmakers and policymakers, I spend a lot of time in Washington, D.C., they have to learn about a lot of things. My congressperson has to know about everything from healthcare to manufacturing to energy to financial services. They have to know a lot of stuff about a lot of things, and it makes it hard for them to do a lot of very specific work, especially around financial services. And as a result, the regulation is very blunt, and what they ask for is very blunt. And to give you a great example of that, Kabbage, as an example, is regulated as a bank that takes deposits, a bank that transfers money, a bank that processes payments. But we're not actually all of those things. All we do is lend money. We lend money to small businesses. But the regulations are really burdensome. In many other European countries, you're actually able to get a license for lending only. You can become a licensed lender in the UK. You can become a licensed lender in the EU, which means you're regulated as a lender. I'm not posing systemic risk to the financial services, you know, industry or ecosystem in the United States. I'm just lending money to small businesses. But the regulation doesn't work that way. The regulation, again, is very blunt, and it attacks all financial services companies in much the same way without appropriately regulating each of us for the thing that we do, at which we're very good. And it means that we waste a lot of time worrying about things that actually aren't part of our businesses at all. I think the last example is that regulation tends not to take technology and data into account. And the example that I'll use for that is in the US, the Fair Credit Reporting Act. The Fair Credit Reporting Act, admirably, was enacted in order to make sure that lending decisions about consumers were made fairly, and that the information used to make a lending decision was appropriately provided to the customer so they understood why that decision was made. And it created transparency for lending decisions. But the challenge is that act was created in the 80s and updated again in the 90s. So it didn't take into account all kinds of new technologies that exist today, and a really important thing today, which is social media. So there are a number of companies that are actually using social media to help make decisions about small business customers and about consumer lending decisions, and giving them access to the industry and to financial tools they wouldn't have had otherwise. But they don't have access to that today because the Fair Credit Reporting Act doesn't allow social data to be used to make a credit decision, therefore eliminating access to lots and lots of new entrants into the market because they don't have data that's in the credit bureaus. So in short, I would say regulation certainly stifles innovation in financial services technology, and I would hope that we would find some ways to remedy that.
Thank you, Kat. You had 30 seconds more, so I have to cut it off from the rebuttal time. Claire, go ahead. Now it's your 6 minutes.
Thanks, and thanks for the input of Kathryn. I had to do a bit of work when we were starting this panel because, you know, I'm not as fluent as Kathryn in English, even if I live in London. And I was like, what does mean stifle? And stifle, you know, the definition that was given to me was like this nice, you know, like pillows that is like, you know, covering up, you know, like the innovation. Does it feel for you like regulation is this nice pillow covering up something? Does it feel like that? Surely not for me. Let me talk to you about the 3 points of my argument. The first one is to avoid vanilla and really transform for the benefit of the customer. What is really required is collaboration. And to collaborate, you do need a framework, a regulated framework. The second point is actually regulators really need innovation. It's at the heart of what they are doing today. You may have heard about RegTech, but we will talk a bit more about it in a second. And RegTech, so regulator needed innovation is at the heart of what's going on at the moment in order to unleash this innovation back to the customer. And the third point, which is maybe the most critical, is it's our responsibility to not introduce systemic risk in the system and to protect the customer. And that's why you need regulation. That's the basic of it. So let's elaborate on each of these points. The first one is collaboration. There is 15,000 startups out there, probably more as I go and as I see the back. There is more than 80 million that have been invested in fintech, but still a lot of them they do vanilla, you know. They set the bar in terms of customer experience, but they don't truly bring the innovation to the customer. And where I really see examples that have succeeded, I've seen them through the collaboration. I've seen them through the collaboration of a Kabbage that have partnered with ING or Santander under a regulated framework in order to bring back this innovation for the customer. I've seen it, you know, from another point of view in the UK, where we have set the regulation of open banking. Open banking is enabling each of you to access their data that is on the database of banks and to share it with third party. This journey started with all the banks together, most of the fintech representation in the UK, the regulator and Treasury working out together what will be this new channel. What is how technically will work. But we did that by collaborating together, and in order to enable this collaboration to happen, it was only possible because the regulator was there with the regulated framework about how this conversation will have been done. And lastly, you know, really, when I think about the biggest innovation of the decade, you know, what do you think it is? What do you think is the biggest innovation in financial services? It's mobile banking. The biggest scaled innovation is mobile banking. In Lloyds, we have 9 million of our customers that use at their fingertip with Touch ID, you know, like each day connecting to their mobile banking app. This is something that 5 years ago didn't existed. We didn't have this mobile banking application. And it's been built under a regulated framework. And it really makes a difference in the day-to-day of our people. I'm sure you all use it, or at least I hope you are all using your mobile banking app. My second point, so really like, you know, collaboration only happen under this regulated framework. My second point is regulators actually much need innovation, and that leads us to what we call RegTech. So RegTech is a transformation of the policies and how the regulator works by implementing some of this fundamental notion of technology. And some of the RegTech you may have heard about is Suede, which we are partnering with in Lloyds, which enable us to do better financial reporting, more instant, more practical, removing the cumbersome, you know, like people sometimes process that, you know, is quite heavy in terms of making that happen. So RegTech is emerging, and it's the beginning of the journey. Let's be honest, you know, like everybody is making moves. We have seen a regulatory sandbox happening in the UK, in Hong Kong. It's at the moment it's the Festival of Fintech in Singapore, where everybody, like, you know, that is led by the mass. So everybody is starting. They are starting by regulatory sandbox. They are starting by, you know, like producing specific regulation. But what is sure is we cannot stand still. We need to meet the customer needs. We need to evolve as we go, and that's what regulation is doing. And they are unleashing back, you know, the innovation back to the customer. So if I look at the UK, there is more than 20 challenger banks that have been created in the past 5 years in the UK, all regulated. I've seen Monzo, you know, starting from a mobile app at the fingerprint to becoming a bank because they have a good notion of what does it mean, you know, being regulated and how they can harness the power of the regulation to build up their next generation of financial services and deliver innovation to the customer. It's fundamental because what's going to happen is the first country that changed their regulatory landscape and transform it is actually going to attract a lot of the ecosystem and a lot of the innovation back for their customer because this fintech will want to consume it. And that's why, to the point of Kathryn, you know, the leader of fintech today is the UK. It's happening in London because all the players are playing together. They are playing the collaboration framework and they are moving the dial for our customers. So my last point is really around our responsibility about not introducing systemic risk and protecting the customers. There is a lot of thought ongoing about, you know, like changing the financial landscape and the infrastructure of financial services. We cannot do nothing. We cannot just, you know, like it's not the job of one. I explained it's the job of a collaborative area. It needs to be supported to support the regulator, to support all the actors. You know, like people like me that are change agents and change the way we do business need to work with the regulator, need to work, you know, like the startup community is already up and going, so they don't need this vibrant push. But it's our responsibility to not let this systematic risk enter. I will just conclude and leave you with this thought. You know, like when you try to do something that is really transformative and really hard, you know, in your day-to-day, in your team, you know, I always say something. In my team, I always recruit people around me that are better at one skill than one other. So think about it. Innovation will only come because we take the best at one skill than one other. We'll take the best in the banks, the best in the fintech, the best in the regulation. That's the way innovation will really, truly be unleashed. So I actually think regulation is encouraging, creating competition, and a good area for innovation to be there and to be purposeful and sustainable for society.
Thank you, Claire. So before I survey the crowd again, just one pick of an argument that you want to rebut from Claire.
I think I would talk about the concept of reg tech as a business model. To me, the fact that there is a whole industry built around basically making it easier to deal with regulation tells me that regulation is really complicated. And it tells me that there's a huge market to sell a lot of technology to financial institutions because there's a void in the market, which is a void of the ability to innovate, a void leaving the inability to build new products for banks because they're so stifled by regulation. So to me, rather than sort of putting a Band-Aid on it in the form of adding technology to manage really cumbersome regulation, it would be nice to go backwards and say, what kind of regulation are we talking about here? It would be wonderful if we could make the regulation simpler, easier to understand, current, addressing current technologies and current products and current consumer needs. So to me, building technology on top of something that's already really complicated isn't solving the underlying challenge.
Claire.
There is no doubt about the point of Kathryn that we are just at the beginning of the journey to really transforming this regulatory landscape. I did mention it. There is no point to argue against this argument. But my point is, it's not possible to do nothing. You need a regulation framework in order to make sure systematic risks are not introduced in the system, and you need to work all together to make sure the innovation can serve the right purpose, which is service the customer needs, and reach out to destination.
Okay, thanks a lot. So now it's your time again. Please show me your hands who thinks that regulation will stifle innovation. So who's on Kat's side? There's one. Only one? 2, 3, 4, 5, 6? Okay, a few of you. And who thinks that regulation will not stifle innovation? Who's on that side? Oh, okay, Claire, that's a good point for you. But nevertheless, for this last round of arguments, I'd like to switch sides because I know that each of you knows the other side very well. So maybe, Claire, you want to jump in first. What would you say if you were Kat?
I think Kat had very strong arguments. I was actually quite surprised because I will expect much more people to sit on their side, knowing that most of you are coming from the startup landscape. I think, working in a day-to-day with the regulator, and most of my work is actually to work, with the regulator around identity, data, and these topics are pretty big. This topic will, they underpin much more than the financial services. And I think to some extent, RegTech is a much bigger leap than FinTech. And I think it's very important to understand that the future of the internet could be much more differentiated. We know the level of fraud that is existing today. We know that some of the limitations that exist in our physical world cannot be as limited in a world that is digital and exponential. And therefore, it's really the big push from a regulation point of view to understand and boost, the RegTech landscape. But it's not only going to come from the regulator. They do need much more around. And I think that's what we will see over the coming years. Can they leap? Can we leap? Can we understand that it's not just about transforming financial services, it's about transforming government, it's about transforming education, it's about transforming all this sector. And being at the heart of a bank transformation, this is so bloody hard. This is very hard to transform ourselves. We've been very successful. We have 13 million of customers online, but we still have much to do. When I go to work in the morning, heads on, we are like, we need to do that for our customer and to follow our customer needs. But to some extent, it's also a people story. It's about finding the right skills on the market. It's about finding, we've talked about it today, the AI, the data scientists, the digital leaders. It's about finding all of them. And, there is a question mark about how we make this right. How do we go through this transformation and make it right? So can the regulation really support that? Can they really encourage the innovation? Will be my thoughts that I leave with you to support Kat's arguments.
So Kat, if you were Claire and you would have to argue for regulating fintechs, what would you bring forward?
Well, honestly, Kabbage exists because of regulation. Because the banks have a hard time serving small businesses in this particular case, because of all the regulation, it left an opportunity for us to innovate. So we're very grateful for that opportunity. And I think that many times innovation happens because of things like regulation, because of restrictions that are available. It causes people to figure out, how can I do something a different way? How can I do something in a way that serves the customer while at the same time taking care of the customer? So I spend a lot of time meeting with policymakers and lawmakers and regulators in Washington, D.C., because we really believe that it's important to work with regulators to help educate them, to understand exactly what the products are that we're offering and how we want to serve customers. So we believe in regulation and we believe in protecting our customers. I think there is just a fine balance between making sure that regulation is more of a series of principles, guiding principles by which we all operate, and in which we all are interested in operating to take care of our customers, and less specific about exactly how we go about doing that. And I feel like if we were able to move to that, then I think regulation could become a really important and valuable and productive part of financial services technology.
Okay. So thank you very much, you two. I think we have a very interesting and a very balanced debate. That was one word that you both used, that it should be balanced in some way. And I think we can all agree that it's not how many rules are applied, it's what rules and what the quality of the rules that are set from the regulators. So thank you both very much, Claire. Thank you, Kat. And thank you to everyone.
Come on, Kat.